Welcome to Finxocapital Daily News. I'm here to walk you through today's pivotal market movements and economic indicators. Let's delve into the headlines that are defining our financial landscape. In stock market news, Asian markets are facing a rough start to the week. Stocks slid broadly today, pressured by a strong US payrolls report that pushed bond yields to 14-month highs. This spike in yields is testing equity valuations as the earnings season kicks off. S&P 500 and Nasdaq futures are also trending downward, adding to Friday's pullback. Corporate earnings season starts this Wednesday, with major players like Citigroup and Goldman Sachs set to report. The question is, can corporate optimism hold against rising borrowing costs? And in Forex news, the US dollar is dominating. After last week's blowout jobs report, the dollar index hit 109.88, its highest since late 2022. The euro has dropped to $1.0210, while the British pound slid to a 14-month low of $1.2129, driven by concerns over rising borrowing costs in the UK. China's central bank stepped in today to defend the weakening yuan, relaxing offshore borrowing rules. Despite these efforts, the yuan remains near a 16-month low. Traders are watching inflation data and upcoming Federal Reserve speeches this week for further clues on rate directions. Oil prices are surging for a third straight session. Brent crude climbed to $81.23 per barrel, its highest since late August, while US crude hit $78.12. The spike follows new US sanctions targeting Russian oil producers and shipping fleets, which is expected to severely impact Russian exports. This has pushed top buyers like China and India to seek alternatives, further tightening global supply and driving prices higher. Analysts suggest short-term risks could push Brent prices above the $85 mark. Economic resilience remains the theme for the US, with Friday's robust jobs report cutting expectations for Federal Reserve rate cuts this year. Inflation data due Wednesday could be pivotal, potentially closing the door on easing altogether. Over in China, December trade data surprised with a 10.7% rise in exports and a recovery in imports. However, the growing US-China trade surplus has reignited tariff concerns under the incoming administration. Finally, in commodities, gold prices remain resilient, holding firm at $2,686 an ounce despite a strong dollar and rising bond yields. Investors continue to see gold as a hedge against inflation and policy uncertainty. Meanwhile, tighter oil supplies from Russia have pushed Brent and WTI prices to their highest levels in months. Analysts predict more volatility ahead as sanctions reshape global crude flows. That wraps up today's session of Finxocapital Daily News. Amid fluctuating markets and economic uncertainty, we'll continue to provide you with the latest updates and analyses. Thanks for tuning in, and we look forward to bringing you more insights tomorrow.